Hey everyone, welcome back to Corporate Decoder. Today we're diving into Citigroup's recent 8K filing, and let me tell you, it's less too big to fail and more strategically adjusting buffer zones. Before we get started, if you find value in understanding complex corporate reports, make sure you're subscribed and join our Discord community for more in-depth discussions. The link is in the description below. Scroll form to be 8K scroll. This filing is a current report, basically an update on important events happening at the company. The date of the report is July 1, 2025. The main story here is about Citi completing the Federal Reserve's annual stress test. Think of a stress test like putting a bank's finances through a simulation of a really bad economic situation to see if it can survive. The result: Citigroup's indicative stress capital buffer, or SCB, requirement is going down. It's now projected at 3.6%, which is lower compared to the current 4.1%. That's a decrease of 50 basis points. In simple terms, a basis point is 1/100th of a percentage point. So this means Citi has a bit more breathing room in terms of the capital they need to hold aside to cover potential losses. Also, their preliminary standardized common equity tier 1 capital ratio regulatory requirement is also going down by the same amount. It will be 11.6%, a drop from the present 12.1%. The common equity tier 1, or CET1, is a ratio that measures a bank's core equity capital compared to its total risk-weighted assets. It's a key indicator of a bank's financial strength. As of March 31, 25, Citi standardized CET1 capital ratio was 13.4%. This was 130 basis points above the regulatory requirement of 12.1%. Basically, they were already doing pretty well. Good news for shareholders: Citi plans to increase its quarterly common stock dividend. It's going up from $0.56 to $0. But this increase needs to be approved by Citi's board of directors each quarter. They also started a $20 billion multi-year share repurchase program in January 2025. So far, they've repurchased $3.75 billion worth of shares. Year-to-date share repurchase programs reduce the number of shares outstanding, which can increase earnings per share and potentially boost the stock price. The document contains a disclaimer reminding everyone that some statements are forward-looking. These are based on current expectations but are subject to change. Actual results could be different due to various factors, including economic challenges, regulatory proceedings, and changes in regulations. The report references other filings with the SEC, including the Risk Factors section of Citi's 2024 Form 10-K, encouraging investors to review these documents for more details on potential risks. That is a good reminder for everyone, especially when investing. Scroll Exhibit 280 number scroll. The filing includes exhibits listing the securities registered and the inline XBRL format of the cover page. Now, let's put all this information together. Citi's stress test results are a positive sign. The lower SCB requirement means they have more flexibility with their capital, and also the capital ratios are still looking healthy. The board seems to feel confident, which led them to increase dividends and continue the share repurchase program, which are both good for investor confidence in the company. However, it's essential to remember that these are forward-looking statements, meaning that these can and will change. The final SCB requirement could be different, and various things such as economic conditions and regulatory changes could impact the planned dividends and share repurchases. Also, as with all financial institutions, regulatory compliance is a potential area of risk for Citigroup and Ove. Citigroup seems to be in a pretty solid position. The direction definitely seems positive. What do you think about Citi's future and these stress test results? Share your opinions in the comments below if you learned something from this analysis. Please hit the like button and subscribe for more corporate deep dives. Also, don't forget to join our Discord community. Thanks for watching, and I'll see you in the next video.